Welcome to Trends with Benefits, an award-winning podcast by VanEck with a forward-looking perspective. We explore new ways of thinking about the markets, work, and life. Here's your host, Ed Lopez.
Welcome to this episode of Trends with Benefits. In this quickie episode, I'm catching up with Matthew Sigel, Head of Digital Asset Research here at VanEck. Matthew, welcome back to the podcast.
Happy New Year, Ed.
And today, this is an exciting one because, everybody loves predictions. We're going to revisit your 2024 predictions for the crypto market and what you see coming up in 2025. I got to give you props on one of your 2024 predictions. There were 15, I believe, but you hit Bitcoin price target on the head. You said we'd hit Bitcoin 100,000 by year-end 2024, and we were, gosh darn it, right there, right?
I think we nailed the date on that as well. So 100K in Q4 came true, so that's good. I mean, in general, I think it's a good mental exercise to just try to lay out expectations for the year. Helps us to manage position sizing. And we try to back these with a mix of data analysis and our general interpretation of market and technology trends. So includes, macroeconomics, regulatory developments, and then kind of token specific ideas.
Yeah, I love it. I mean, not a lot of people do predictions or put a stake in the ground, but I mean, as you said, I think it's a great exercise just to kind of get a sense of what you're thinking and how to start interpreting what you're seeing in the marketplace. And yeah, no guarantees here, but I think this is a really thoughtful discussion and exploration of the crypto markets that we'll go over. How about the rest of 2024 predictions? There were 15 of them. How did you guys do?
Yeah, so we asked someone to independently score them, and the rating was 8.5 out of 15. So that's about a 57% batting average. It's not perfect, but it's enough to keep us in the game. But as you know, Ed, investing is not about batting average. It's about slugging percentage. So I think we did okay. You want to hear the key successes and misses?
Yeah, let's go over that.
Yeah. So I think, what we got right clearly was the Bitcoin price and the timing of those new highs. I think we also got the politics correct. Every major political party that faced an election in 2024 lost it. My supposition is that Satoshi set the Bitcoin 4-year calendar with the U.S. election cycle in mind. So, with this type of turnover comes the prospects of disruption and innovation. And I think that works in Bitcoin's favor. We got ETH's rally correct, and we also got it correct that ETH would not make all-time highs. We got Solana's outperformance correct. We got Bitcoin miners' underperformance correct. All-time highs for stablecoins. And I think a long shot call that came true was that crypto gaming would have a breakout hit. And that happened with a game called Off the Grid, which became the top free gaming title on the Epic Games store last year. What we didn't get right, we had a call for an NFT rebound and NFTs making all-time highs. Meme coins kind of sucked some of the speculative fervor out of the NFT market. We were premature in predicting the rise of Bitcoin yield, so the ability to essentially stake your Bitcoin and earn a rate of return. That looks like it's going to be a 2025 story, not 2024. And then I think we were also premature on some of our DeFi calls. So there is a potential that DeFi will become a kind of KYC'd experience where regulated market participants can participate in a DeFi-like experience. And I think partially for regulation reasons, that has not happened yet either.
On Ethereum, I think you had a call that it would outperform tech stocks. Was that true? And maybe you could just talk a little bit about what's happened with Ethereum over the last year.
Ethereum was up I think it was 40% in the year. So, I think it outperformed QQQs, but it didn't outperform the highest of the tech flyers. One of our calls was that Ethereum would undergo a fork, so a change in the code base in Q2, and that would essentially cut prices for all of the Ethereum users and catalyze a big increase in activity on what's known as layer 2. So these are blockchains that settle on top of Ethereum, but can enable some degree of customization. And one of our calls with that was that these Ethereum layer 2s would capture the majority of decentralized trading on Ethereum. That came close. It didn't quite surpass 50%, but it came close. I'd say one of the things maybe that we missed was that hard fork would send some of the economics towards the L2s at the expense of the main Ethereum L1. So I would say that Ethereum's take rate decreased in 2024, and that may be one of the reasons why it underperformed some of the highest flyers and definitely underperformed Bitcoin.
Now, you guys had a call for the approval of spot Bitcoin ETFs, which was true. Has the success of those ETFs surprised you in any way?
Well, it was a great year for the Bitcoin ETFs. I guess what has surprised me has been more about what kind of buyers participated rather than the overall success. We thought that, VanEck's traditional customers, the wirehouses, the bank-owned brokers, the publicly traded broker-dealers, would be more aggressive in embracing Bitcoin ETFs because of the regulatory headwinds of the Biden administration. That didn't really come to pass, and we can talk about that because I think that may be a call for 2025, but it was mostly retail investors and hedge funds who bought the Bitcoin ETFs. So I think the surprise was really that regulated financial institutions were slower to adopt than we might have thought.
Well, let's go on to 2025. We can get into some more of those topics and some more of those details. What's top of mind for you for 2025? Maybe you can highlight some of your top predictions.
The biggest and the easiest call, I think, is that adoption continues of this asset class, driven by a 180-degree turn in the regulatory approach. And that's thanks to all the new pro-Bitcoin members of the incoming Trump administration. That should be very helpful, especially for the non-Bitcoin part of the market, where we and others have applied to bring some ETFs to market based on Solana and other coins. And the Gary Gensler-led SEC, has put the kibosh on that. So one of our calls is that a Solana ETF will be approved in 2025. I think the most contrarian call that we have this year is that application tokens begin to narrow the performance gap with the layer 1 tokens. For most of 2024, the market was really led by BTC, Solana, and to a lesser degree, Ethereum. Bitcoin outperformed every sector we track, but these L1 tokens led by Solana massively outperformed the application tokens. The developers can build applications on top of these layer 1s like Solana and Ethereum. So the smart contract platforms, these L1s were up close to 80% in 2024. The index of applications that we track was up only 35%. And we think this dynamic is going to shift in 2025. There are a wave of new applications that are launching, delivering innovative and useful products that have the potential to drive value to their respective tokens. So AI is one such theme, decentralized physical infrastructure networks like telecom and Wi-Fi networks that are token enabled. These types of apps offer a lot of potential to capture investor and user interest. So we think that the performance will broaden out a bit more between the L1s and the applications.
Now, there's been a lot of excitement around crypto, particularly since the election. Do you think that momentum continues? Do you see any headwinds going into the first quarter, second quarter, and then just kind of generally for the rest of 2025?
Well, we still give the benefit of the doubt to the 4-year cycle for Bitcoin. whereby there's a halving year in which the new supply of Bitcoin goes down by 50%, and that tends to catalyze the most explosive part of the bull market in the subsequent kind of 12 to 18 months, with the 2 years post the halving being the bear market year. So that would be a bear market in 2026 and some type of parabolic top in 2025. So that's the base case, is that we can approach 180,000 this year as long as the macro and the regulatory 180 cooperate. That $180,000 target is based on 10 times the bear market bottom. And that would be the smallest ever Bitcoin cycle by far. So the previous smallest cycle was 2,000%. We expect that each cycle Bitcoin volatility and returns will come down. So we haircut that 2,000% down to 1,000%. That gets us to 180. There's always a potential for it to be derailed. I think if inflation, really reaccelerates and the Fed has to back off of its rate cutting cycle, then we might have to reevaluate that prediction.
How dependent are your current predictions of future prices for Bitcoin on this idea of Bitcoin becoming a reserve or part of the U.S. reserve?
Moderately dependent. So when you look at kind of Bitcoin ownership compared to gold, what you see is that a Bitcoin has much higher retail ownership and much lower government ownership. Of course, there's Trump's plan for a strategic Bitcoin reserve, but the adoption outside the U.S. has already kicked off. 7 countries are now mining Bitcoin with government resources. That's up from 4 in 2023. So we had 3 new countries join last year: Argentina, Ethiopia, and Kenya. These are all countries that have deals with the IMF, which I think is not a coincidence because Bitcoin introduces kind of a new negotiating leverage for these countries. We've noticed that since Trump's plans to announce a Bitcoin reserve, a number of other countries across the world are also mooting the establishment of this. So I don't think it's critical. I think that Wall Street can keep the party going if the wirehouses adjust their kind of macro 60-40 models to include 1 or 2% in Bitcoin, as we have done with some of our multi-asset portfolios here at VanEck. But in terms of my long-term price targets for Bitcoin, they do include significant adoption at the nation-state level, Bitcoin being used as a currency to settle global trade, as the BRICS countries are planning to do, and eventually Bitcoin being held by global central banks.
And one of the other big topics last year was AI, and it's your 5th top prediction here of AI agents on-chain activity surpasses 1 million agents. Talk to me a little bit about that and how AI coordinates here in the crypto space.
Yeah, this is really one of the most compelling narratives we think for 2025 is a concept called AI agents. So AI agents are specialized AI bots, so little pieces of software that enable users to achieve outcomes. And these outcomes can be something like maximize yield or maximize social media engagement on Twitter. And the agents optimize for these outcomes by using their abilities to change their strategies autonomously. So you can feed the agent data. You can train it to specialize in one domain. And there are a number of platforms that are enabling very easy launches of these agents. So anybody really now has the tools to create an agent and perform on-chain tasks. And that gives, we think it gives kind of non-experts in the field access to LLM type models with the ability to perform transactions. And those transactions are starting out very simple as, maximize Twitter followers with the goal of selling a certain project. But eventually, they're going to transact more specifically. The result will be this enormous proliferation of agents that creators can lease out to generate income, and the income can be monetized via the token. So the token might capture a percentage of the income from all the agents that live on a certain protocol, and that would encourage speculators to buy the token. And as we've seen in crypto, it's kind of a, fake it till you make it, as is all of capitalism, right? But what's really, magnificent about crypto is just the instant capital formation, right? You raise global capital in one click, 365, 24/7, and then use that capital to build something useful. And hopefully that creates a virtuous cycle.
And then jumping around a little bit, talk to me a little bit about the Ethereum blob or blob space and what's significant about that for 2025?
Yeah. So one of the developments from Ethereum's April fork, which, as I mentioned, essentially cut prices dramatically for users of the Ethereum blockchain, was a concept called blob space. So blob space is a specialized data layer where these Ethereum L2s can submit a compressed history of all of their transactions to Ethereum. It's essentially bulk pricing for L2s, wholesale pricing for L2s. And the L2 pays fees denominated in ETH on a per blob basis. And that mechanism began in April. It's been growing quite nicely. And only in the last few weeks of 2024 have these L2s really started to absorb a material amount of this blob space, such that fees have begun to inflect higher. So the full year blob revenues was well less than $100 million. We project that over the course of 2025, these blob space fees will exceed $1 billion. And that really should cement ETH's role as the ultimate settlement layer for decentralized applications. L2s are, now almost 50% of the activity on top of Ethereum. I would expect traditional banking and brokerage participants to launch their own customized L2s in the course of 2025. There's already been some European, I think it was Deutsche Bank, who's announced plans to do that. Blob space is critical towards scaling the network and then eventually serving as a key revenue stream for the Ethereum L1.
Well, great. Now we want people to go and read your predictions blog at VanEck.com. And as we think about your 2025 predictions and as investors out there read this, what advice would you offer crypto investors preparing for the upcoming year?
So, yeah, we recently did a conference call for financial advisors, and there was a survey as part of the call that we included to kind of gauge where the consensus was. And one thing I found remarkable from that survey was that 48% of the advisors have zero weight to Bitcoin. And the majority of that 48%, when you ask them like what would catalyze your Bitcoin purchase, the answer was lower prices. But then when the lower prices come, it seems like everyone gets afraid that Bitcoin is over, and then they don't deploy. So I think my advice or suggestion would be set a dollar cost averaging strategy. Whether you're buying 10 bips a day, 10 bips a week, 10 bips a month, I don't really care, but stick to it. And over every 3-year time horizon, this strategy has made considerable returns. So I just continue to be surprised by the polarization of this asset class. I guess maybe it's expected given what's happened politically over the last decade. But that 48% stuck on zero, I think it's too high. And I think by setting an allocation plan that's essentially time-weighted average, that's a good way to take the fear out of deploying to this asset.
Yeah, I think that's a good piece of advice. Every time, say, Bitcoin hits a new high, you wonder if is that too high? Is it going to pull back? I guess it's not out of the realm of possibility that we see another big pullback, right? At some point, 30%.
Oh, yeah, we will. We will, right? So when you look at the previous parabolic peaks to this market, so 2021, 2017, these were great years to be in Bitcoin and crypto, but you'll see 5 to 7, 10% corrections and at least one 30 to 40% drawdown. So definitely expect the volatility to continue.
What about what you expect from the Trump administration? The campaign got a lot of support from the crypto industry. What do you expect the Trump administration to deliver?
I do think that there will be a strategic Bitcoin reserve that is announced. I think at the federal level, it's most likely to be a renaming of the 200,000 Bitcoin that the U.S. government already owns. Most of that seized from Silk Road and other like criminal or fraudulent entities, but simply renaming that as a Bitcoin strategic reserve and promising not to sell it will change how investors think about this asset and change how our trading partners and enemies think about it as well. Whether or not there's a legislative passage of a strategic Bitcoin reserve at the federal level, the odds are not great on that. But our prediction is that at least one U.S. state will announce a strategic Bitcoin reserve. As for the Trump administration, the biggest impact is just the personnel. When you look across the cabinet, how many cabinet members own Bitcoin, it is a majority. And that should trickle down to SEC, CFTC, FDIC policy in a way that makes it easier for publicly traded companies and regulated institutions to experiment in this asset class. This is a spot market driven asset class. I don't think it prices things in advance very well. So I do think the politics in the US is going to have a big impact on investor sentiment and buying pressure.
Fantastic. And then finally, what's the best way for people to follow you, learn more about you and your research?
Yep, we are very active on social media, so please follow the VanEck US Twitter account and follow me at Matthew_Sigel. We put out all of our research and all the charts that we come across pretty much every day. And you can also go to our website and sign up for the email distribution list so you get our monthlies. We have a Bitcoin monthly and a crypto monthly.
Fantastic. Always great research, very thoughtful. Matthew, again, thank you for your time. Appreciate it. And thank you for tuning in to this episode of Trends with Benefits.